On the Barron's Roundtable, my colleagues Ben Levinson, Carleton English, and Andrew Bary. So, Ben, it may not feel like it, but it is now official. We are in a bull market. How did that happen?
Jack, we entered a bull market this week, and we did it in the most tepid way possible. The S&P 500 gained just 0.4%, and the other indexes didn't really go up that much at all. Instead, it was the small cap Russell 2000 where the action really was. It gained almost 2%, and that's a sign that there's a rotation going on underneath the surface, and people are willing to buy more than just Apple and the rest of big tech.
So it just shows you that people who are concerned about so-called market breadth were kind of wrong this time. People said that the market breadth was too narrow. Only 7 or 8 stocks were basically driving the market higher. It turned out rather than the market going down, it's broadened out. Now small and mid-cap stocks are doing really well.
That sounds like a more sensible market to me.
Well, to some people, they'd look at this and say, recession fears and whatnot, why is this market going up? But at least on one level, we're seeing that it is more sensible. GameStop reported earnings this week, and they fired its CEO, and the stock dropped 8%. They also canceled that earnings call. The stock is now down at 23. That's split adjusted. It was up as high as almost 87. But I think what's happening now is the meme stock trade has really faded away, and instead, you're having people are treating it like a regular company.
And so you buy stocks because you like the outlook for that company. That's an amazing change.
Isn't it?
What are we looking at next week, Ben?
Looking at the Fed. It's supposed to take a pause next week. That's what the market is betting. I'm a little bit worried that we're going to have a sell the news kind of reaction to it, especially if the Fed decides that it's a hawkish pause where maybe they're going to pause and then hike again. But if they decide to maybe hike one more time and then really say we're done, maybe it goes up.
All righty. Meanwhile, I'm concerned about your health, Carleton. Your voice sounds a little scratchy.
Yeah, so for part of this week, I could really do a Mae West impersonation. And a lot of people, definitely in the Northeast corridor, felt the same thing because of the effect of the wildfires that are going through Canada. Earlier this week in New York, we saw the orange sky cloud. I know you were caught walking through it for a bit, too. And what's scary about this is we're seeing this effect happen very early in the traditional summer wildfire season. Also to be getting it from Canada and for New York City and the Northeast corridor to be feeling the effects. So it's not just that, this effect of, the bad air with New York City actually at one point this week having worse air quality than some of, the more traditional areas in the world. But it's also the market and economic effect of what this prolonged wildfire season can mean.
Yeah, we saw it in a couple of securities, right?
Yeah, absolutely. So, one, maybe just look at the commodity side first, right? The price of lumber went up about 7% over the last week. Then you see companies like Carrier and Whirlpool, which provide HVAC units for households and commercial real estate alike. They're also seeing a surge because people are really starting to pay attention to the effects of these wildfires. I mean, I was in an office building where I got down to the elevator and it smelled like a campfire.
Wow.
That's in New York City, hundreds of miles away from where the fires were. Peloton actually had a brief pop because people thought that we'd be exercising indoors again. So, you're seeing a lot of stocks have this impact from it.
And real quick, there also have been some long-term impacts that we've seen in the insurance market.
Yeah, so even ahead of what we saw in the Northeast corridor this week, you have a lot of the insurance companies no longer are planning not to issue new policies for California, which has been prone to wildfires because of the risks there.
Andrew, let's switch to aerospace. For Boeing, it just seems to go on and on and on. The Dreamliner is a nightmare.
Well, it's just another one of the series of manufacturing problems for Boeing. Investors actually don't really care all that much. This has happened before for Boeing. The stock has actually been strong lately. It's hit, it's near a new high for the year. And the reason is that investors are looking out to 2025 and 2026. They figure the manufacturing problems are going to be fixed. And this, after all, is a global duopoly now with Boeing and Airbus. And no one is going to challenge them for at least another decade or two. And so basically, they feel the profitability will return to Boeing.
I hate to say it, but it certainly looks like in recent years, Airbus has been well ahead, right?
Investors ought to consider Airbus, which is lesser known. It's the European consortium, and it's got a better balance sheet, a better narrow-body plane, and it may be a better value right now than Boeing.
Okay, let's switch over to the big clients for these companies, airlines. They're doing very well. I haven't been on a plane with an empty seat in a long time.
Well, planes are flying full or close to being full, and Delta could be a big beneficiary of it this summer. It's one of probably the best managed of the big airlines right now. The stock was weak earlier in the year because of recession fears. Those are fading right now, and Delta's trading around $40 a share right now, only about 7 times earnings. Look for potential resumption of the Delta dividend this summer.
Delta does run a tight ship, I got to say. Real quick before we go, an interesting stat crossed Barron's wire this week, which is that airline pilots now at the top end are making $700,000 a year.
I know it's a big number. I think that maybe is on the high end, and that's an issue for the airlines. Costs are rising, both for fuel has been an issue and also for labor, but they're offsetting it with prices right now on fares.
Well, when you're in the plane, I do want the guy at the helm to be well paid. I feel better that way. Anyway,